Hello guys, welcome back to my YouTube channel. So in today's video, we're going to be talking about the concept of liquidity. All right, so we're going to be looking at what is liquidity, buy side, the buy side and sell side liquidity, internal and external liquidity range, liquidity sweep and grab, liquidity run, draw on liquidity, and POI. All right, so these are actually topics that you guys have actually requested for, and I'm going to be breaking down everything step by step for you guys. So don't hesitate to hit the like button and subscribe to this YouTube channel and share this video to as many persons as possible. Today is actually my birthday. I'm going to be doing giveaway to like 10 first persons to actually message me either on my WhatsApp, either on my WhatsApp or my Telegram channel. So don't hesitate to hit the like button and subscribe. My name still remains Ojong Joseph. So what is liquidity? Liquidity is what sustains the market by the flow of traders' money through stop loss, buy stops, sell stops, take profit, even buy limits, sell limits. Liquidity is like the oxygen of the market. The market cannot exist without what? Liquidity. So all the market needs is what? Liquidity. So the market thrives on what? Liquidity. So liquidity pools are areas where money rests the most in the market. All right. So liquidity pools are areas where money rests the most in the market. So such areas are highs and lows of the market. So whenever you see a high and low, there's liquidity resting above those areas and below those areas. So liquidity often exists above the highs and lows of the market. So those areas always contain liquidity pool. All right, what is buy side liquidity? Buy side liquidity has to do with the accumulation of liquidity above current market highs. It comprises of stop loss from sellers with short position and breakout traders anticipating upward price movement. So now let's look at this area. Let's look at this chart here. So now where is our buy side liquidity? So above this area we have our buy side liquidity. Anything above there, that's our buy side liquidity. Now let's look at this area from here. All right, let's look at this area from here. So what happened? That was our buy side liquidity. Okay, so this was our buy side liquidity until the market went ahead and swept the area. Swept the area and went above, and then this becomes our new buy side liquidity. All right, so that's our buy side liquidity because it contains stop loss from sellers with short positions and then breakout traders anticipating a long move. And then now what is the sell side liquidity? Sell side liquidity is the reverse of that. So the sell side liquidity has to do with liquidity resting below the lows of the market with the stop loss of sellers and then the stop loss of stop loss of buyers and then the stop loss of sellers anticipating a short position. So now those liquidity pools create potential reversal point as they provide a concentrated source of liquidity for institutional traders to tap into those areas and execute long sell orders. All right. So now these areas, what happened? You discover that the market goes into that area, grab the liquidity and start selling, because those are institutional areas and the institutional traders are actually looking for liquidity to actually grab. Now we're going to look at external range and internal range liquidity. All right, let me just go ahead and delete this. So looking at external range and internal range liquidity. So that high there is our external range liquidity, and this low, everything up below and above is our external and what internal range. So we have external range, everything outside of this range, okay, from that high to this low, everything outside is what our external what range liquidity. External range liquidity refers to price ranges at extreme highs and extreme lows where liquidity acts, where the market as what liquidity pool. Okay, so since we have liquidity resting above and below this area, so the market will often what these areas will often what attract prices. Prices will often go above that area to sweep liquidity and often come below this area to grab what liquidity. All right, so internal range liquidity. Internal range liquidity has to do with order blocks. Okay, internal range liquidity has to do with areas where prices range highs and lows, and institutional pool have footprints in terms of order blocks, structural liquidity, fair value gaps, and all like that. So right here you can see that within this area you can see that there is what an internal liquidity where you have your fair value gap. All right, the market went ahead and just tapped into that fair value gap and started dropping. So but in this particular video we are not going to be using a fair value gap, we're not going to be using fair value gap. So we have our external liquidity, all right, and we have our internal liquidity, which is the structural liquidity, which we use, okay, for entries. All right, liquidity sweep and grab. What is liquidity sweep and grab? Liquidity sweep has to do with price movement that breaks through a previous high or low only to reverse back in the same direction which it would break out to from. You understand? For instance, now look at this area. We have what a liquidity sweep right here. All right, you see this move. Okay, we can actually use this area right here. All right, we have what a liquidity sweep right here. Why? Because the market swept out this area and could not what trade above. Okay, so it could not what trade above that area, so that becomes what our what liquidity what sweep. All right, so we have our liquidity sweep at that area. Okay, so the market grabs liquidity and what continues what in the original what direction which what it broke out from. Okay, continues in the original direction which it broke out from. So that's liquidity sweep. And then here again we also have what a liquidity sweep right there again. Why? Because the market took out that high, swept the liquidity and could not continue trading in the direction which it would swept liquidity from, and then it did what automatically what reverse direction and started selling to the downside. So this is our liquidity sweep, and that's how to identify what liquidity sweep. So what is liquidity run? Liquidity run has to do with price movement when markets break out above old high or below old low and then continues to trend in that direction. So right here we have what a successful liquidity run. Because why? Because market broke out from this area and then continued to drive in that direction. So this is a successful liquidity run. Why? Because market break out of this area and then continue selling in the same direction. So that is a liquidity run. Okay, so draw on liquidity has to do with identifying the next liquidity point where market is likely to attract prices. So now our structural liquidity is always a draw on liquidity, because it's always market always has a tendency to attract prices to that area before reversing to the downside. So now we have a sweep of liquidity. We have two sweeps of liquidity. We have a break of structure to the downside. Okay, so above there and below here we have our external liquidity. All right, we have a break of structure. We have a second break of structure. Okay, we have a second break of structure to a downside. Okay, we have a second break of structure to the downside. All right, So since we have a second break of structure to the downside, so now we're just going to go ahead and mark our draw on what liquidity. Okay, draw on liquidity has to do with the next point where market that is likely to attract price. So that is our draw on liquidity, as you guys can see. All right, so this is our draw on liquidity. We're just going to go ahead and mark it out. Okay, so this is our draw on liquidity. So why? Because it always has a tendency of attracting prices. So now what is POI? POI has to do with points of interest. So to mark your POI, it can use what? Order blocks, okay, breaker blocks, all right, engulfing candles, and so on and so forth. So this is our order block, okay. So these are order block, okay. So let's see how the market reacted to it. You guys can clearly see how the market, this area attracted what? Price, and then now it's now dropping to the downside. So where it's our target here is actually going to be our target, because that is the protected low, which is our external liquidity, which the market is actually looking forward to take. So in case you missed out of this trade, we can still plot to actually enter this trade. Okay, we can still plot to actually enter this trade. So it's just a simple concept. Anybody can actually apply this concept and it will work for them. Okay, so stop loss is above that your external liquidity range, and then trading like the institutional traders. So this is actually really simple, fam. So now let's go down to the 30 minutes time frame, fam. Let's go down to the 30 minutes time frame. So on the 30 minutes time frame, I'm actually still spotting another setup within this setup. So right here, I can clearly see there is a sweep of what? Liquidity, okay. And all right, I can see that there's a sweep of liquidity right here, and then I have a break of structure to the downside, okay, and I have a pullback, which is my draw on liquidity point, but I'm not going to use that one. I'm going to use the one above. Okay, that's my draw on liquidity, and I also have a second break of structure right here. So this is a very high probability trade. So because why? Because it exists within the higher time frame set of what setups. Okay, so this let me just go ahead and delete this. All right, so right now we are to wait for this particular trading setup. Okay, so to actually take this trade, to you can just get whatever you want and then you leave the market. You don't have to stay in the market too long, fam. You don't have to. All right, so just this simple. Okay, you see the particular setup which we're looking at. So this is actually simple. You too can actually incorporate this into your trading strategy. So don't forget to hit the like button and subscribe to this YouTube channel and share these videos to as many persons as possible. Stay blessed, friend.